Morning. Top Gun here, a little before 5 a.m. on Wednesday, March 17th. This is the YouTube pre-market commentary. All right, section 1, the anatomy of the bounce. All right, the first thing I want to do is just do a little semantics here. So I'm calling it a bounce, but we don't know if it's a bounce or a resumption of the bull market. That is a bounce within a new bear market. And I don't know. The market's going to tell us in time which one it is. I'm positioned as if it's a bounce, but we'll find out, to be determined. But what I did want to say is that the market has been rallying since 8:30 a.m. Pacific Standard Time on Friday, March 5th. So we're looking back about eight sessions. It hit a low at 8:30. The S&P did of 37.30, and then yesterday morning at 8 a.m. it hit a high of 38.90. So that's plus 6.7%, and 39.80, and that's an all-time intraday high. Now the rally has been led by growth over value, with the S&P Growth ETF IVW up 5.7% since last Tuesday, compared to plus 1.76% for the S&P Value ETF IVE, as you can see in this chart I've included. So people are also now asking, this reverses a recent trend rotation from growth to value. So people are saying, is this a counter trend move, or is this now a resumption of growth's leadership? Again, the market will answer that for us. Okay, now yesterday, however, the market peaked out at 8 a.m. in the morning, and it sold off for the rest of the day. The NASDAQ lost 150 points for in the last 5 hours of the session. And interestingly enough, value, the IVE outperformed growth, the IVW, by 110 basis points over those 5 hours. So I don't know if this is the end of this this move in growth, and therefore it is a counter trend move that's now run its course. But it's just worth noting, but its meaning is not definitive. Okay, TLT bear market. So TLT is the long-term Treasury ETF, and as you can see in this tweet from Ryan Dietrich, it's now down more than 20% from its high. So bonds are in a bear market, and the correspondingly interest rates are on the rise. And this is important context for today's Fed meeting, which is the crucial event of the week, because the Fed is in a really tough spot. On the one hand, they're trying to prop up this asset bubble that's supporting the whole economy, and for that you need easy monetary policy. On the other hand, they're trying to control inflation, because if inflation gets out of control, it's going to wreak havoc throughout the economy, and that requires tight monetary policy. So Powell is caught in a really tight spot. Crescott Capital, perhaps the best hedge fund in the world, in my opinion, based in Denver, Colorado, led by Kevin Smith, and Tavi Costa works there as a portfolio manager. Wrote titled their February research note, "The Fed is trapped." Right. So I've linked to that in my blog, and I've written about it before. A nice piece. Bank of America calls today's Fed meeting one of the most critical events for the Fed in some time. Right? So Jerome Powell's got this impossible balancing act where he's got to be dovish enough to prop up risk assets, but he's got to be hawkish enough not to cause bonds to sell off, interest rates to rise, which is going to then cause risk assets to sell off anyway. So can he strike this balance? I don't know. He's certainly going to try. I think he's aware of the situation, and the reaction in the final 2 hours today after the Fed releases its a statement at 11 a.m. Pacific Standard Time, and then I think Powell's going to have a press conference, is going to be important.